Hey everyone, Phil Stevenson, Mortgage Nerd here. Want to go over a real scenario of unscrupulous companies, these large competitors, these big branch lenders that have all these people that have to eat, have to live, so they have to charge high rates. But it's not just the rate. It's what they did to this veteran that really ticks me off. So all these numbers back here are real. Here's the closing disclosure of someone that closed. One of my mortgage loan originators, my loan officers, came to me with this loan. So you see the 4.5, everything is true. I redacted their info on here. Now, here's our loan estimate. Someone that I just started the loan with yesterday, 3.75. If I was locking her, I'd lock her in at that. I'm not locking her yet because now is the time to float and wait for as long as we can to get the best rate possible. So here's how this scenario works. So this is the competitors column. We have the rate, APR, loan to value, MIP, which is mortgage insurance, and the VA funding fee, right? So our rate is 4.5 for that competitor FHA loan that just closed. The rate for the VA is 3.75. Now, for my company, any government loan you get, FHA or VA, the rate's going to be about the same. Now, of course, credit score factors into that, but that rate is extremely high right there at the FHA. But let's look at the APR. What's an APR? Annual percentage rate. I'm going to do a separate video on APR to try to explain what that is. But basically, you put the closing cost, you spread it out over the life of the loan, and then you put it into the form of a rate, add it onto your interest rate, and that's what you get. Nobody understood what I just said. So 4.5 rate, APR is 5.2. Over here we have the 3.75 rate, APR is 4.09. That's a huge difference. Look, 5.2, 4.09. That's over 1.1% difference being charged between interest rate and other costs. Let's not stop there. Loan to value, they got financed at 86%. These people had to bring money to closing. Right there, $989 they had to bring to closing from borrower to qualify for this loan. God, I don't get it. 86 loan to value as opposed to VA loan, which is 100% loan to value. Now, this is what really gets me. Mortgage insurance premium. $3,642 is what they were charged in mortgage insurance with this FHA loan. Every month for the life of the loan, there's $137 added on top of that in mortgage insurance. As of today, June 18th, 2019, that doesn't go away. Ever. Not at the 78% loan to value like conventional loans. It could change. There's a bill out there trying to change that, but as of today, it doesn't go away. And these people should know that. So this is why this APR is so high. So this mortgage insurance premium, what would it be with a VA loan? None. Now, people will say, but wait, VA has a funding fee. FHA has MIP, VA has a funding fee. I know, totally corny, such a mortgage nerd. That's how I remembered it when I went through my classes. So, VA funding fee for a veteran that has service-connected disability. Veterans don't know this. People in the mortgage industry don't know this. A lot of people don't know this in the mortgage industry. Any type of service-connected disability, they go in percentages, 10% and 10% increments up to 100. Whether you have 10% disability or 100% disability, your entire VA funding fee is waived. You're exempt. So why are you giving this guy who has 100% service-connected disability? This is how you're treating our veterans. MIP of $3,642 plus $137 a month, it's over $1,500 a year when they could have had no MIP and no VA funding fee. 100% financing to pay off debts because they had debts, which is probably why at 86 loan to value they had to bring money to close because they didn't qualify for a higher payment. But if you would have rolled in all those debts, I bet you they would have qualified. We're going to find out because we're going to help them out in this situation. But this just doesn't make sense to me. This shows you how unscrupulous people are out there. And it just gets under my skin. This is how veterans are being treated by companies that are supposed to be military friendly and helping veterans. They're taking advantage of them, not helping the veterans. So this is not something that we do, obviously, in my office. Everything we do is ethically. I'm on the ethics committee of one of our national associations. This type of thing just can't be done. Taking advantage of borrowers needs to stop. It's never going to stop. There's always going to be someone out there who thinks more of themselves and they take advantage of people and their lack of knowledge. So make sure, anyone that you're working with, I don't care if you're in process, let me review what you've got going on. I had someone tell me the other day that they're going with someone else because they're getting a 3.5% rate. I said, okay, then it's either adjustable rate or it's a government loan, which they're not veterans and they didn't qualify for FHA. I said, send me your documents, let me see. I kept after them. After a while, I stopped asking. But there's no magic bullet. When I see the entire loan estimate or closing disclosure, I could tell you what's going on. Come to me for free advice. I'm here to help. I'm not going to sales pitch you. I'm going to tell you what I could offer. If you want to go with me, go with me. If you don't, go do what you got to do. But hopefully we can help some more veterans. Don't let veterans get out there and, do these types of loans. And, we're here to help. Thank you very much, Phil Stevenson, Mortgage Nerd.